Thank you, Katie. Good afternoon, everyone. My name is Tyler Chapman. I am a consultant with LexisNexis, specifically working with Juris and the professional services team. I have been working with Joel Eaton, who's the manager of the technical services team, for quite some time on the profitability and how we've been working on that and how we can make it more useful and beneficial for our clients out there in the Juris Suite world. We're going to jump right into the discussions on this and how profitability can work for the firms out there. So I first want to discuss what the reports are going to cover. Then we will jump into the reports themselves, circle back around to the data input, and then I'm going to give an overview of the process when we install the profitability package at your firm. So first of all, profitability. This is a report, part of the profitability package is a series of reports, and they slide in with income statement, cash flow statements, balance sheets. It's kind of another component that many Fortune 500 companies can maintain with a net income statement, but with law firms and other professional services businesses, it's really a way for them to look at resources expended versus resources gained from their clients. So the really large benefit for law firms and other professional services organizations is that profitability includes some cash flow items that you may not see on your net income statement. So there are some firms out there that are set up so that partners receive all of their compensation or large parts of their annual standardized compensation through the payroll process with tax deductions and then maybe an annual partner dispensation at the end. There may be other firms where all of their compensation, even the monthly draws, are paid out through just direct cash disbursements. And the problem, as we know, with income statements is if you're in that second group, your income statement won't show your profitability because you have non-P&L cash flows, large expenditures. We all know professional services organizations, the largest cash flow item is the wages and disbursements you pay to attorneys, partners, and other staff. So that is one of the issues with just a generic income statement is they don't have those items on there. One of the items that's not going to be on the profitability that also isn't on your income statement, though, are asset purchases. If the firm maybe gets new case management software and your accountants have instructed you, your outside accountants have instructed you to capitalize those costs. Well, you could very well end up spending $20,000 on software and another $20,000 on services to get that up to speed, or $100,000 spending on tenant improvements for a new office, or new copy machines, or your copy expense tracking stuff. So just like an income statement, this isn't going to capture all of your cash outlays. This is going to, the really large components this is trying to figure out is basically the amount of resources, cash, you have laid out for the hours worked in a time frame versus the cash you received for other hours that were previously worked and billed but received during a time frame. The best way to think about it is maybe if you were to look at a large Fortune 500 company, the operating cash flow section of a cash flow report. It's the cost for the firm to day-to-day service its clients, but not necessarily all of the cash or all of the expenses that go into the firm over its lifetime going to be on there. On another point, though, it's really beneficial because it's going to show the business's health. Do the cost of keeping the doors open and operating, are they being offset by the revenues in a certain time frame? It's really tying the efforts that a firm expends to the reward that it receives, and by that I mean the hours that employees are paid for, both associates and paralegals for their billable work, and the partners for the work they do. Again, regardless of it being salary type compensation with an annual draw or bonus, or whether it is ongoing monthly draws. Whichever way you pay your non-employee staff, we can capture that in the profitability reports. What it also does, and it can sometimes be beneficial for attorneys, I apologize if any on the line who might take offense to this, but it really covers up and obfuscates the small items that managing partners may get distracted by. They see large copy expense, or they see huge postage expense, and they go right to that. That doesn't look right. That's out of line. This basically kind of rolls that in just, anonymizes that overhead expense and lets them focus on is this person profitable? Is this client and or matters profitable? Is this line of work that we expanded 2 years ago, is it now profitable? It really says we don't care right now about postage or these other small components. We can look at those later. They are part of the story. They can be dug into, but right now we're looking at overall effort versus the overall reward for certain categories. Again, I'm being vague right now. I plan to get into those in a minute, but right now I'm just kind of talking on some high points. As I said, the storytelling as to why it's profitable is done outside of just these high-level reports. They're best served as 30,000-foot viewings. You look at these numbers, and then you dig into the story behind it, or you have your staff dig into the story behind it. Okay, now that we've identified what's going well, why is this going well? Now that we've identified what's going wrong, why is it going wrong? We know, since we had to compile this data, what goes into it. So now let's start to dissect the data. But now we know which data to dissect. We've spent the time in looking at the high level to determine where the problems are or determine where the successes are, and how can we recreate or stop those issues right there. So the next slide is going to be a timekeeper profitability. This is based on dummy sales data we have and numbers that I have fabricated, but still ones that make sense based upon the sales data that we have. So right here, this is the lowest level. This is for each of these working timekeepers. And again, this is a working timekeeper profitability package that we offer. If you want to have it modified for billing or for originating timekeepers, that's possible. We can have those discussions and see what you're trying to accomplish. But right here, this is from a working timekeeper perspective. What this is this is each of the timekeepers that we've keyed in budget values for and have working values right there. It gives you the classification of these the personnel types they're assigned to, along with their names and initials. And this is for the little over the first half of 2007. So it's going to show you the recorded hours. How many hours have each of these people keyed in the stated time frame? And then they give you the value of those hours. And again, this is for billable work. That is not, if the billable flag in Juris is unchecked, those hours are not going to be a part of this reporting because they did not go towards the level of effort. We are trying to determine the entries that are made that are expected to be collected upon. It is the units right there. If you think of a law firm sort of as a factory that's producing widgets, if they have scrap material that doesn't go into, that gets rolled into other parts of the cost per unit right now, we're looking for the actual delivered number of units, the delivered billable work hours and amounts. That's why the non-billable is not included in there. So it gives you, again, the value of the worked, the value of the time billed in that, so not necessarily worked in that time frame, but bills posted in that time frame. And then the received amount is the cash receipts for time worked whenever. So it is, worked maybe in 2006, billed in 2007, collected in 2007, worked and billed in 2006, but collected in 2007. Basically, the cash receipt is dated in 2007, and they were the working timekeeper on the bill that cash receipt is paying. It will not include prepaid. It will not include trust amounts. Again, this is AR values that have been collected upon. The next column, comp and fringes. This is one of 3 data points that has to be input on a regular basis to be calculated. Comps and fringes is the direct compensation paid to these individuals, or draws, if in the case of partners, if they have balance sheet draws. So this is going to be generally gross pay. It's going to be, if you want, it can be the taxes for those individuals, or it could be 401k contributions, health insurance contributions. It's a discussion that as we implement the profitability package we will have with the firm and determine the way we want to go. But it's basically what you've given them that they've put in their pocket. The second one, support allocation. This is another category that you'll directly input. This is the servicing costs for this individual. Say you have 2 partners that share 1 assistant, or 3 partners that share 2 assistants. Some firms have taken to dedicating that the employment costs for that individual under support allocation. Maybe they have specialty services or equipment that had to be purchased or leased. They could go in for those. I mean, it's as you determine other costs that you can say this exact cost belongs to this working timekeeper. I was working with a firm, we're in the midst of it. They decided to use this category for dues and CLE expenses. Again, it is direct expenses for a timekeeper that they want to keep separate from the costs, because they, every timekeeper has a budget that they're allowed to use. If they take more expensive CLEs or join extra associations, they want to directly attribute it to a timekeeper, but since it's different for everyone, they wanted to kind of keep that under support. The third one is overhead allocation. So basically, you take the P&L, anything you've put in comp and fringes and support allocation, this is where everything else gets caught here, and it's allocated amongst the working, billing, and receiving timekeepers. Again, admin staff, this is where they're going to fall. You won't have, your director of administration listed here because they're generally not a working timekeeper. Their compensation, the billing department, the accounting department, the pens, pencils, the copier lease, all of that's going to go into the overhead, and the firm will make a determination on how they want to allocate it. Do they want to do it based off of units? So many units for a partner, so many units for an associate, so many units for a paralegal. Do they want to do it off of, square footage? Do they want to do it off of caseload? There's right and wrong, there's not wrong, but there's different ways you can allocate it, and it's whatever makes sense to the firm, whatever the powers that be feel is an equitable method that everyone can agree upon. And once that's determined, we can go through the best process of calculating that value. I mean, generally it's you take your P&L and subtract out everything else, and you can have an Excel spreadsheet that helps you calculate and break it down pretty quickly. Next one is net profit or loss of that timekeeper. So it is the received amount. So for Ann A. Allen, she received $178,000 in change. You subtract the $87,500 that was paid in this time frame, you subtract the $11,000 in change and the almost $30,000 in overhead, and Ann Allen, as a timekeeper, has a profit of about $51,000. That means after everything you've paid to her, paid to keep her operating, and then paid her portion of the general operating expenses, there's $51,000 in residual cash, some of which may have gone to asset purchases, because again, that's not part of this, but there's about $51,000 in residual cash that is left for disbursement. Again, you have to take those, cash flow items into consideration as well. Basically, for every hour that she collects upon, she's about $138 is what her operating costs are per hour. So it again is the recorded hours divided across the total, it's comp and fringes plus support allocation plus overhead allocation divided over the recorded billable hours. So an hour of billable work costs about $138 for Ann Allen to do. So this is, the cost for all of it. You can see that some people are money makers and some are, as you would expect, secretarial staff, administrative staff who are doing billable work. You're not probably going to make money on them because most of their work is going to support others. So, they are a loss maker from a pure billable work perspective, but they probably provide value to the firm that isn't being captured here. The next one is, this is the practice class profit and loss. So right here you can see which areas of the firm are providing benefit and which ones aren't. The way this goes from working timekeeper is through the matters that the timekeepers have collected on and worked for. So there's a middle ground between the working timekeeper and the practice class when it shows the clients and matters that people worked for, and then based upon the practice classes assigned to those matters, it rolls up to this level. So this is a good place for a firm to take a look and see, okay, we opened up a new practice group 2 months ago. Are we breaking even on them yet? Are we, we opened this office up a few weeks ago. Are we breaking even on that? It allows you to see what parts of the firm are operating and contributing to the overall firm health. You can see that the practice class names are blue. They are links. You can click on them and drill down and see smaller pieces of this puzzle. If we go back a slide, this is probably about 15, 20,000 foot view. This is closer to 30, 40,000 foot view because it's even further aggregated data for people to take a look at. And again, it is the summed hours of billable work, the value of those hours, and then the received amount and the net profit loss. If we look here, for example, bankruptcy's got a lot of recorded amount but low received amounts. Is it that these operate on a contingency basis? Maybe you will see those payouts later on. There's pieces to this puzzle that until we work with your firm and understand how you operate, it will be tough for us to, speak to what they are. And a lot of it is the firm admins, the people operating the firm, they know how it operates, and they will be able to speak to the story and help us answer those questions better. So at this point, we're going to move into the nuts and bolts a little bit about how the data gets input. The first part, before we even begin to input data, is we have a conversation with the firm. We use the budgeting module in Juris Suite to input these values. We input 3 values for each timekeeper. So this is just a screenshot. We enter in fees worked. These are going to be the costs. Again, this is the direct compensation. The fees billed is the indirect to support staff. And the last one is the fees received, which is where we would plug in the overhead. So we have a conversation with the powers that be. So if we like to have the managing partners in the room when we have this conversation, we like to have the accounting people in the room when we have this conversation. So that way all players, the people who want to see the information, the people that have to compile the information, and the Juris people who know how it needs to be entered can all come to some understanding about how this is going to be done. We have and we also have the overhead conversation, which do you want to calculate it ways X, Y, or Z? Which is the best way, which is not so appropriate for your firm. It's generally a 2 to 3 hour conversation in which, the accounting people say, well, these are the reports we have available right now, and then the managing partners push back and say, well, I really like this method, how can we get it? And basically all the players are there to really rough out a framework. Sometimes things are, we put a pin in it, we have put it on hold, and the firm's going to mull it over a little bit more. Other times everything's hammered out and it's all agreed upon. This is how things are going to go. But the real key thing is you have the decision makers in the room, you iron it out, and that way the next time the Juris people and the back office people meet, there's been an understanding, they have a way they're going to operate, and we can begin the input process. So step 1, we determine what's going to go in each component, what's going to be considered direct, what's going to be the indirect and other compensation, and how are we going to calculate overhead. That way, the next time we meet, we can begin the direct input. So the second time is generally the Juris consultant and the back office, the person responsible, the director of administration, the accounting manager, whoever's going to be responsible for inputting this information. We go over where that information is stored and what are the best ways to consolidate it. Is there some Excel trickery, to quote Kathy Baker that can be used. She likes using the word trickery. Is there some kind of Excel trickery that can be used to easily pull this information? Is there a report from your payroll provider? Are they able to customize reports for you that you can use to do this? Are you entering it in your GL in a fashion that can be easily pulled? So what are the where is the information stored and what's the best way to pull it? If it's already easily assemblable, then we can skip that and just go directly into the budget import process. We also cover the balancing of it as well. So not only are we covering how to input it, but now that you've input it, does it balance? We will take into account you have some items that are on the balance sheet, so you have to make sure you adjust your expenses for X, Y, and Z, and your overrun will be this. The newest version of the report has the ability to calculate overhead for you. We'll skip to the next slide because it talks a little bit about methodology. So right here, we have calculating overhead, the methods. Like I said, the newest version is going to say, I think it's 4 units per partners, 3 units for associates, and 2 units for the administrative staff. That means if you don't want to calculate it for you, this will do it for you. Depending upon how your firm inputs data, you may have to go ahead and calculate it manually. But again, we discuss various ways and methods of calculating and then help you with a process to input it and calculate it every month. But that will then be input in there, so it'll be seen on the reports. Administrative efforts. Sometimes you have attorneys who may be department heads. They're managing partners. They have other externalities that if you do not account for them, they will look really inefficient or unprofitable or be much less profitable than they're normally seen on these reports. And how can we adjust their values to account for that? Well, the easiest way to do it is to use negative overhead. It's hard to fake cash receipts for things. Then you have to fake work efforts. That's just not bad because your collection reports aren't going to match your actual cash in the bank. We have found that we like to use negative overhead. Reduce their overhead cost and basically say this person costs $10,000 less per month in overhead because they spend so much of their time doing administrative work and managing their firm. It's their job to keep things running. They have these other tasks that prevent them from keying in the hours, so we will reallocate this expense to other people. And maybe you decide that associates don't get the excess managing partner overhead, other partners do. So again, that can be other conversations we have, and we can wrap that into your workflow and to the general calculations. Maybe a nice handy-dandy spreadsheet that will, say, you want to reduce one person's overhead this much and reattribute it to these people. So, there's all sorts of different ways we can work with you to help get those calculation values in there. Next, I want to move on to other things beyond just the numbers. What else is important in profit? What other things are drivers in profitability? Net Promoter Score is one thing in which it's hard to, it's easy to quantify, but it's hard to figure out how to do it. I believe a lot of the verbiage out there, there's, depending upon where you see, it is how many of your clients are actively promoting you as a service provider versus how many that won't say anything bad about you but aren't actively doing anything, versus the third set, which are, I don't know if I want to, I keep using them because the cost of change is too high. So it's how many people are actively promoting you versus indifference and those not actively criticizing you or those actively criticizing you. It's, do the clients want to keep working with you, and do they want to have others work with you? So it's a very important metric that gives you a feeling of, do you have a good relationship with them? What other qualitative metrics can you find? I know I've been working with some coworkers on other ways to think about firm success, and is it beyond just, did you solve the case, yes or no? Did you do it the way they wanted, yes or no? there's many shades of gray between those. You know, was it a positive outcome or not? I mean, it could be, yes, they solved the case for me, but they exceeded the budget. They stayed within the budget they gave me, but it took too long. You know, there can be other just items that aren't easily quantifiable from those perspectives that you just, it's hard to see. So profitability is going to give you the hard data points, but there's other things that can drive firm success beyond just, the firm itself making more money on a client than they expend on a client. And we're wanting to encourage you guys to be involved in the Juris community. We have LinkedIn groups that people bounce ideas off of each other. There's, Juris user meetings regionally that you can bounce ideas off of each other and get, how do you handle this situation? How do you handle this other situation? It's just firms who use the product helping each other out to solve the questions, and then being on the advisory board as well to give us feedback in on the product as well. So at this point, we're about 30 minutes in. I'm going to step back from the presentation for a moment and show you the actual reports in Juris Suite and the budgeting module and how all of that is keyed in and how they are run. So let me go here to Juris Suite. So in the budgeting module, here is the cost budget I've entered, and I have it for all these different timekeepers. And so we're just going to pick on this one right here. So you can see that I keyed in these amounts. And if I have one firm I implemented this for, they wanted to do it on an annual basis. So they don't calculate these values every month. They calculate them once a year. And if you were going to, just do profitability on an annual basis, there's no reason why you couldn't just key in the annual values and do a spread across it. You wouldn't have to enter in, 36 values for every single timekeeper. You could enter 3 values for every timekeeper and just spread it out if you only want to look at this annually. Other firms, they're looking at it on a monthly basis or quarterly or semi-annual basis. It's however the firm wants to operate, but you just use the budgeting module with the timekeeper budgets for the ones that you're going to report profitability on. So right here, if you leave overhead blank, the report will calculate overhead on its own metric of 4 units of overhead for partners, 3 for associates, and 2 for paralegals. I had one firm that decided on 1.2 for partners, 1 for associates, and 0.75 for paralegals. So again, it's whatever the firm decides, and that's part of the whole profitability package when you purchase it from us, is that we have integrative discussions on how the firm wants to operate. So after you've entered this budget in for each of the timekeepers for those time frames, under my reports and under the P's, you have the different profitability reports. So the first thing we do is we have the discussion: what do you want to consider direct, indirect, and how do you want to do overhead? Step 2 is getting the information entered in there, and part of step 2 is using the budgets report here to make sure that the values are balanced. So if I run the helper report and we scroll down here to the very end, I'll show you. It says total firm expenses. These are the items on your P&L. So this is what's keyed in right here from your P&L. And basically this report will say, okay, your total P&L for the month is 146 and change. You've entered in this and this. Okay, so that means everything else, the difference between the comp and the support, is going to go into overhead. Here's the units, spread it out. So again, it will calculate it for you. If you key in your own values, then it will replace it with there and show you the difference between the two of them, so you can make sure that you have fully allocated all of your expenses. We've given you the tools to make sure that what you're entering is correct, and we don't leave you to have to run 3 and 4 and 5 and 6 reports to balance it afterwards. But here is basically your budget information screen for you to review. After you've reviewed that, and we walk you through again the reviewing process, if it doesn't balance, we will go back and help you find out why it doesn't balance. We'll get it locked down so that way going forward from the administrative back office perspective, you know how to enter it and to validate it. Then we jump into the P&L, the profit and loss that I ran. This is where we have the newest version has this flag here, so consider only billable hours when calculating. And if you want them to have worked hours including non-billable ones, you can set it to no, but I generally run it for just the billable ones, and you can see here's the information that I screenshotted and placed on that slide. If we go back, I'll show you the client matter one. So right here, this is client profit and loss. Right here you can see this client, here's this timekeeper, here's the matters they've worked for. Here, different clients and all the matters they've worked for. So is this person working efficiently on this client matter? And as we all know, when you go through and input in a cash receipt, if it is a cash receipt that pays 80% of a bill, first, all expenses will be paid, and then whatever cash is left is prorated out across the timekeepers. And I believe it's on a dollar value. So if it's a $100,000 bill and they paid you $80,000 and it was all fees, then it will not be based upon hours worked or hours billed. It will be the dollar value of that will be prorated across. And so same thing if you do cash credit memos to write off the balances as well. It's again prorated, so right here, if these bills are paid in partial, it is prorated across the dollar values. That's not to say you couldn't, use the cash receipt tool if you are getting partial payments. You can say, pay these items first, pay this timekeeper, pay these expenses, pay this stuff first before you pay the other things. So you can surgically apply them if you so choose. Which might be something that you do going forward. If you implement profitability, maybe your new firm workflow is for partial payments. Partners are the last ones to get paid because they are the business owners. They get whatever is left over. You have to pay your employees first, or maybe partners get paid first on those for the profitability purposes. It will affect. So if your firm does receive lots of partial payments and you are surgically applying those payments or plan to, it's all part of discussions to have with the consultant as you implement the package to determine the effect of those workflows. Finally, we'll go to the practice class one right here. The only difference between the two is that one lets you drill down and one doesn't, because sometimes when you print your reports, you don't like the blue hyperlinks printing. So here you can see it's basically broken down for you with the by practice class. It has the detail plugged in. At this point, we've got another few minutes, and Katie, I think you had a few words you wanted to say, but I'm ready to start taking any questions that people have out there about the profitability reporting in Juris Suite.
All right, fabulous. Well, first, before we go into that, I just want to, I'm going to go ahead and put up a poll to see if any of you would like more information on profitability reporting in Juris Suite. So if you could just take a moment to answer that question, that would be extremely helpful. And I'm going to give everybody just a few minutes. All right, I'll just give it another second. All right. So as a reminder, if you do have any questions for Tyler, please feel free to ask them via the questions pane located in your webinar control panel. I know we already have a few questions, so keep them coming. Our very first question is this a separate module that will need to be purchased? Can you speak to that a little bit?
I sure can. So the modules you need are the budgeting module and the reporting module. If you have those two modules, then you can purchase the profitability package, and it is, we get you up and running on it. So if you have full Juris Suite, you don't need to purchase any new modules, just the package itself, but the modules needed to run the package, getting a little splitting hairs there, are the budgeting module and the reporting module. So if you have those two, you're ready to purchase the package and start going through the process. And this is a very Montessori style implementation. We have the first discussion, and then the consultant will circle back with you and say, okay, when are you ready to do the next things? It is not one of our more traditional things where we schedule things out for the next 2 weeks with sessions here and there. It's here's what needs to happen. Now between us, we're going to manage our own calendars and get those things accomplished.
All right, fabulous. Our next question is there a version of Juris Suite that you need to be on?
No, it works on, I believe, all of them. It's just, they're reports. You just have to, feed the reports into the import process.
All right.
If you are going to be running an older version, other than, I would say older than 2.5, talk to your account manager first, and we can run that past Joel. But I believe on 2.5 and newer, it'll be working just fine.
Okay, fabulous. Our next question is, for this report to work, does this mean a timekeeper's compensation will need to be entered into Juris?
Only in the budgeting module. So if you're worried about confidentiality, I don't want everybody to know everybody else's pay values, you can still enter in $150,000 associate salaries for the month. The only place you have to key in their individual values is here in the budgeting module, which through group permissions you can limit to just certain individuals within the organization. So if you are worried about individuals' values appearing on the general ledger, you do not have to do that. The only place they have to be input individually is here in the budgeting module, which again you can restrict and lock down to just 1 or 2 back office staff who are either running this or are in charge of inputting the information.
Okay, great. Our next question is, how does
I want to follow up on that for one more thing. It was specifically designed so that you did not have to plug in timekeeper values in the GNL. That was the reason why we went this route and through the budgeting module. We did not want to have people key in all those tiny values so they could be seen. So that was a follow-up for that.
Okay, fabulous. How does it allocate overhead for timekeepers here only partial year? What about timekeepers with collections but no salary/benefit info? How are those people calculated?
Sure. So those people would be very profitable, unfortunately. When you are comparing apples and oranges here, you're comparing current working expenditures, current working expenses for timekeepers versus current receipts. So if you have timekeepers who maybe left the firm late 2006 who are being receipted into 2007, because that's when these time frames are, they're going to be profitable because you're not paying them but you're still receiving funds for them. And if we flip that on its head, say you have somebody who just started in the second half of 2006, they're getting ramped up, they're not going to be very profitable because they are costing more because they aren't billing as much work, or the work that they're billing for is not being collected immediately. So it's by default is showing those values and comparing the two of them there. So it is current worked versus current receipted. It is by design showing going to be profitable for the people who have left and unprofitable for the people who have just started but haven't receipted yet.
Okay, great. Is there a way to get sample reports or PDFs of sample reports?
Sure. Just let your account manager know. Right here, the screenshots right here, here's 2 of them right here. So those will be part of this. So if you needed to show somebody, you can grab these slides from when they're distributed, or your account manager can get the full PDF from one of us in professional services and send it on. And I'll try to get, maybe I'll try to get these printed out, and Katie can attach them with the the PowerPoint.
Fabulous. Yeah, I'm happy to do that.
Okay, I'll print those out after. I'll print them to PDF after this and send that to you with a slide deck, Katie.
Okay, great. So those are all the questions we have at the moment. I'm going to give it one more minute. Is there anything else, Tyler, that you wanted to touch on?
Not right now, other than, I mean, we're raring to, help you guys go and, deliver this profitability package. The next component after the input and the looking at is there is time built into this to help the administrative folks dig into the data. It's not, determine overhead, enter the values, and then send you guys on your way. There is time and meetings scheduled in that we will now dig into the data with you to help you answer the questions of why these values are the way they are. And there's also time built in as well to review it with the managing partners. So if, the plan is for Joe, the managing partner, and, Jack, the accounting manager, to meet with the Juris consultant and hammer it out, the consultant and Jack will go back and get the values input, review the reports together, determine why the numbers are the way they are, and then circle back with Joe, the managing partner, and go over it with them. So as you are delivering this, we will help set you guys up for success to answer the questions of why are these the numbers that are being presented to us. So it's comprehensive from the input to the explanation. We go through all of that with you so that you're able to speak to it and use it effectively after it's been delivered.
All right, fabulous. And I just have one more question. How much is the profitability pack to get these specific reports?
Oh, they don't tell me such important answers such as how much things cost. They just point me in the direction and send me there. I unfortunately don't have the cost on that. It is outside of my sphere of influence, I hate to say. Your account manager, whoever you talked about that will be able to get that information for you. I honestly don't know.
Not a problem. All right, well, thank you all for attending today's Feature Friday webinar. This officially concludes our webinar, and I want to thank Tyler once again for his expert advice on today's topic, and thank you to all of our attendees for taking time out of your busy day to join us.